Namaste and a massive welcome back, traders. Today was an absolutely explosive day for the Indian equity markets. We witnessed the biggest gains in recent memory as bulls took complete control. Buckle up because we are about to break down this incredible rally and let's see what fueled this phenomenal surge. The Indian indices absolutely skyrocketed today, delivering returns that many traders dreamt of. Let's look at a sheer magnitude of this bullish wave. The Nifty 50 closed at a phenomenal 24,924 levels, registering an astounding gain of 916 points, a massive 3.82% surge. Similarly, the Sensex rallied with incredible force, closing at 82,429 levels, after adding a whooping 2,975 points, marking an impressive 3.74% jump. So this is a day to remember for Indian investors who actually held the long positions the previous day. What's even more remarkable is that today's rally was broad-based with every single sector participating in this powerful upward move. Let's see what all sectors supported in these gains. IT sector led the charge, jumping by an incredible 6.7%. This move was attributed majorly because of positive global tech news and renewed investor confidence in the sector's growth prospects. And all the major IT giants have seen significant buying interest today. The realty sector also saw massive buying, gaining a substantial 5.93%, fueled by continued strong demand and renewed investor appetite for growth-oriented sectors. The metal sector also continued its significant performance, surging by an impressive 5.86% rally. Positive global commodity prices, strong demand from manufacturing, and positive news on tariff cuts on China could be the driving force for this particular rally. The auto sector also joined the party with a robust gain of 3.41%. There was strong sales number from few of the companies and new product launches which acted as a positive sentiment. And also since there is a broader expectation of economic recovery after the war news that surfaced that India and Pakistan is going to have a ceasefire. So these could all be the reasons for this massive upward rally in almost all the sectors. So even the typically stable FMCG sector saw a significant buying interest, gaining a healthy 2.64% in today's trade. So this indicates broad-based positive sentiment across the entire market. While the rest of the market saw explosive gains, the pharma sector also closed in positive territory with a mild increase of 0.15%. So this suggests even defensive sectors were caught in this overall bullish wave that we had seen today. Now let's look at the global cues that seem to have provided a strong tailwind for today's incredible rally, along with the positive news that we already had about the India-Pak war ceasefire. So, and we could see that it was a largely green day across the entire globe. So, from the Asia front, we saw positive momentum across all the countries. Japan's Nikkei was up by 0.38%. China's Shanghai Composite gained 0.82%, and Hong Kong's Hang Seng saw a significant jump of 2.98%. So this Asia sentiment, along with positive news on war ceasefire, contributed to a bullish mood on the Indian markets. European markets also closed in the green. German's DAX rose by 0.19%, UK's FTSE gained 0.60%, and France's CAC saw a strong rally of 1.35%. So there is a widespread optimism in Europe that further supported a bullish global trend even in the US. So US markets today witnessed a strong rally after the US and China tariff deal closure, and it is expected that the tariff is to come down to almost 125%, which would max be around 25 to 30% on the Chinese goods. So that is when we saw impressive returns and a significant rally on all the US indices. So Dow Jones jumped by a significant 2.36%. The S&P 500 surged 2.63%, and the Nasdaq Tech Heavy surged the gains with an impressive 3.5%. So these are the movements as we speak. So we do not know towards the end of the day what would be the entire percentage movement. So I think it has been overall a green day across the globe. Now lastly, moving on to the commodities. So commodities had shown a mixed picture today. WTI crude continued its upward trend, gaining 2.36% and trading at $62.46 dollars per barrel. So today's positive momentum could be because of supply constraints, or maybe overall positive global economic outlook that we have been seeing across the markets. Precious metals, on the other hand, saw some minor correction. Interestingly, despite the strong bullish sentiment in equities, both precious metals saw a slight pullback. Gold was marginally down by around 1800 rupees, closing at 96,880 per 10 grams, and silver saw a decrease of around 1100 rupees, closing at 97,900 per kilogram. So today's fall could be indicating investors shifting towards riskier assets like equities in this strong rally. Now let's see from the perspective of charts as well as open interests what the market suggests for tomorrow's trade. So we are onto the Nifty indices, and you could see we are looking at the daily chart. So as you could see, yesterday's close was roughly around 24,000 odd levels or below that. Okay, and then suddenly, because of the positive news over the weekend on the India-Pak war ceasefire, we saw a significant up move. Though Nifty opened just roughly around 400 odd points gap up. However, from there we had rose close to 500 points. So that itself is a massive rally that we could see, and this shows a very big green candle, right? So this is a kind of bullish Morbozu, we can say. So now for us in the short term perspective at least, so 24,000 levels would act as a strong support, or this could be acting as a lowest point at least in the short term perspective. Now since we had given the up move from 24,400 odd levels, so this would be our first support. Now any trades that you want to take on a bullish side could be should be above 24,400 odd levels, to ensure that despite a significant downfall of 1-2%, still we should not reach towards 24,400 odd levels. So now from here on, what could we see or suggest for the upcoming days? So since we had discussed the previous day very clearly that because of this positive news, we could see a significant rally, and this rally could be just in a single day or 2 to 3 trading sessions. But today's rally was just in a single day of 3.82%, which was quite massive. We had a previous resistance of 24,800 odd levels, but we have outpaced that level and crossed beyond that. So now we are just tad below 75 points to close above the 25,000 odd levels, which remains as the round figure. Whenever we see these kind of round levels, we will see some selling pressure coming in, but provided if there is a positive gap up that opens beyond 25,000 odd levels, then we could see just an upward rally to continue. Now what are the trades that we could trade? The first resistance that is expected to come is around at this level, which is roughly around 25,200 odd levels. So we might see some sideways movement in a day or two, or maybe we can open gap up and then continue towards 25,200 odd levels too. That is possible, because with the kind of massive positions that had been taken today, there was no single drop of the call premiums at all throughout the day. So that suggests that there have been good buying that was seen on the put side today. So that suggests that at the lower levels now it is difficult for Nifty to come down. So we might trade over and above 25,000 odd levels itself until the expiry. But however, if at the higher levels of 25,200, if we see significant sell-off coming in, then we might come towards 24,700 odd. So this could be the least for this expiry is what we see or expect. Now let's see from the perspective of open interest. So on the open interest, as we could see, so the previous day we were trading or we closed somewhere around 24,000 odd levels. Now you see we do not have significant open interest additions on the put side at 24,000 levels. But you see there have been a massive unwinding of positions on all the calls. So at every level, 100 points, you see there have been massive unwinding that had happened on the call side. However, on the put side, roughly around 50 to 90% of open interest positions got built up just alone today. So what this suggests is the first support that we are going to have is at 24,500 odd levels. Okay, and then as we will see tomorrow's up move to continue, then we might see further open interest positions getting added at 25,000 levels and even at 25,200 odd levels. We only see the strong open interest positions that got added today is beyond 25,000 odd levels. So at 25,000 and above, we see some open interest positions that got added on the call side. So this suggests that Nifty will trade in the range of 24,500 to 25,500 odd levels in the coming days. So the first resistance still holds at 25,000, which is the round off figure. But if we massively open gap up, then there could be some selling pressure that can come. But in case if Nifty resists those levels, then we will significantly start moving towards 25,500 odd levels, because we do not have any resistance at this level at all. So overall today the PCR stands 1.2, which is very bullish and strong, and at the money is 0.07 0.76, because we do not see significant positions that got added. Only on the calls there were additions, but nothing on the put side at 24,900 strike. So overall on Nifty there is a lot of positivity, but yes, in the coming days we have to see how this upward wave is expected to continue from here on. Moving on to Sensex. On Sensex also we see a significant strong green candle, and this candle had significantly crossed above the previous resistance of 82,000 odd levels. Now we are quite above 82,000 levels, roughly around 500 points above that zone. So the first resistance that we had was 82. Now that we have crossed, we might significantly move towards levels of 84,000 odd in the coming days. Now it is just 1500 points. So since tomorrow is going to be Sensex expiry, we might again expect to see some volatility coming in. In case if volatility comes, we would first test the 82,000 odd levels, which is the which was the resistance previously. Now that would act as a support. We might trade in tomorrow's session in the range of 83,000 to 82,000 odd levels. The expectation is that tomorrow again we might see some positivity, at least 100 to 200 points on the Sensex side. So yes, it is going to be a bullish trade again for tomorrow, but because of the expiry or maybe due to volatility, we might close towards 82,000, but not expecting below 82,000 to close in tomorrow's trading session. But we will understand from the open interest. Let's see. So on the open interest, we definitely see significant, roughly around 100% of open interest positions that got added on the put side at 82,000. So here you could see, and there have been a massive unwinding of positions on the call side. So at all the call strikes from 80,000 odd levels until 82,500, we see significant unwinding of positions that had happened on the calls. So this very evidently suggests that the bulls or the put writers have been holding quite strong. The immediate first support that we are going to have is at 81,000 odd levels, which is quite strong. We also have at 82,000, which is quite bullish, and again at 81,500. So in tomorrow's trading session, we might trade in the range of 83,000 levels to 82,000 odd. So 1,000 point range is what we are expected to see. So in case if it starts trading below 82,500, then we will see open interest positions getting built up on the call side massively at 82,500, and that would restrict Sensex to move beyond or close on the expiry day beyond 82,500 odd levels. So majorly 500 points trade we could see, but in case if we cross beyond 82,500 tomorrow, then it would approach towards 83,000. So this is what we anticipate for tomorrow's weekly expiry. On the PCR, overall again we are standing at 1.2, which is quite bullish, and PCR at the money is trading at 0.81, which is again positive and bullish for tomorrow's trading session. Now from the perspective of Nifty Bank also has closed quite positively. The short-term support for us is going to be at 53,500 levels, from where we had seen the significant up move coming in. And then the immediate resistance for us is at 56,000 odd level, which was the previous 52-week high. So for this month, if the positive momentum continues, then we might approach once towards 56,000 odd levels, or maybe even cross beyond that and trade at 56,500 odd levels, and then from there we could see some reversal coming in, and for the monthly expiry we might close somewhere in the range of 56,000 odd levels. So since majority of the positive news have been covered, so we might now start trading in the range bound kind of scenario between 55,500 odd levels till 57,000 odd levels on Bank Nifty. Now let's see from the perspective of open interest. So we see strong positive bullish stance at 55,000 odd levels. That would act as a strong support just 400 points below the spot price. Now on the higher strikes, if we see, there have been few positions that are continue to be held, but at 56,500 we saw some slight unwinding, and at the higher levels also we see some unwinding of positions. But the significant thing that we have to watch for is, even at 54,000 odd levels, we see good unwinding on the put writing, and similar unwinding had been seen on the call writing. So what this suggests, maybe we could have now the positions, major positions getting held from the put writers at 55,000 odd levels. So some unwinding that would have been seen here, and that would have got added as additional positions at 55,000 odd levels. So we have good support at the lower levels on Bank Nifty, but as we move higher, we do not see significant resistance coming in. So that is when, as we discussed, looking at the chart, we can easily break through or move towards 56,500 odd levels in the first tranche, and then approach towards 57,000 levels until the expiry. On the PCR, it is 0.9, which is bullish, and at the money is also trading at 0.9, which is again bullish. On FinNifty also we see significant bullish Marubozu candle today, and this suggests that the immediate short-term support for us is going to be 24,500 25,500 odd levels. So this should be acted as a support. This will act as a support for us. So any trades that we have to take should be taken based on the consideration of this support. So below this, if we see FinNifty getting traded, then we could see a down move coming in. But since there is a quite bullish momentum that we had seen just in a single day's candle, so we might see we continuing to trade in this range and approach towards 27,000 odd levels, which we tried moving previously, and then from there we had seen the significant sell-off coming in. Now that we have seen a strong bullish Marubozu candle now, and it is towards the start of the week itself, so we might continue this uptrend even for the this entire week, and then maybe we might see some consolidation in the range of 27,000 odd until 26,000. So this also would act as a significant support for us, the first support, and then the previous supports are 25,500 odd levels. Now let's see from the perspective of open interest. On open interest, it is very evident at all the higher levels, that is 26,500, 27,000 and even 27,500, we saw call unwinding that has happened. So this very evidently suggests that we are bound to move towards 27,000 odd levels in the coming days. So from the support side, we see at 26,500 odd levels, significant call positions getting added, roughly around 40% open interest positions on the put side got added. At the lower levels, again at 26,000, we see a strong support coming in from the put writers, and we also see open interest positions that got added here. So it suggests that now, at least in this expiry, we might not fall below 26,000 odd levels, and that is when significant open interest positions getting built. Just maybe in today's trading session. If we continue to move higher and approach towards 27,000 odd levels, we will also start seeing significant open interest positions getting built at all the 100 points and even 26,500 round figure. So there is a bullish momentum across all the indices, and we would continue with this momentum going forward. But surprisingly, on the PCR overall, it is just 0.5, which is not positive at all. And at the money, it is trading at 0.85, which is majorly because of this additions and then the unwinding what we had seen. Now, lastly, we will see from the perspective of FII and DII data, because this data very clearly suggests us the interesting moves that is expected to happen in tomorrow's trading session and the upcoming days until the expiry. So now if we see from the perspective of FII's futures positions, they have in fact sold off whatever bullish trades what they had. So they are just holding mild positions in the index futures, which is quite surprising despite this strong up move. On the stock futures, they have added good positions again and holding 19.28 lakh contracts. Sorry. On the call options, they have added 2.08 lakh contracts, which is bullish. But at the same time, on put options, they are holding long positions of 1.82 lakh contracts. So net just 26,000 odd positions are being held by FIAs on the index options on the long side, which is not that significant despite the strong momentum that we had seen today. Quite surprising. Let's see from the perspective of proprietary traders. On index futures, they have shorted, in fact. This is again quite contradictory versus the kind of market movement that we had seen. On stock futures, they have again unwound the positions and holding just 2.24 lakh contracts. On call options, they have been continuing their long positions of 1.26 lakh contracts, and on put options they have mildly shorted 9,731 contracts. So that means net they are all long on index options. So with today's up move, it is the proprietary traders who have made significant money. They held the positions from the previous day and have continued the positions even for the upcoming trade. Now let's see from the perspective of retail traders. On index futures, they are short by 18,000 contracts. On stock futures, they are holding long positions with 15.95 lakh contracts. On call options, surprising, they are again short by 3.34 lakh contracts. So some addition got added despite the strong up move. This could be on the higher strikes is what we anticipate. Else we can very evidently say that the retail traders have been playing foolish in this upward journey. Now let's see from the perspective of put options. On put options, they have shorted 2.25 lakh contracts. So that is, good. It shows that, retail traders or put writers are expecting the upward movement to happen. Now net they are holding 1.09 lakh contracts, which is, massively short in this, upward rally. So if this rally do not fizzle out, then it is the retailers who are going to make a significant loss in this up move, and this is well captured by the proprietary traders. So in this journey, we see proprietary traders have been playing very smart, and the massive losses what the retailers have been making could be being gained on the other side by the proprietary traders, and of course FIIs, because of their smart moves and the strong position what they hold as market makers. Now let's see from the perspective of cash market positions. So DIIs have added 1,450 crores in the equity markets, and FIIs have also added to 1,250 crores in the equity markets. So both DIIs as well as FIIs have taken long position in today's trade. So this suggests that tomorrow also we might continue the positive momentum. If not tomorrow, maybe again, since tomorrow is Sensex expiry, we could see some volatility coming in. And Gift Nifty also suggests some slight downward opening. But though we might open on the lower side, but there are high possibilities that the markets would trigger to move beyond previous day's close, and if that happens, again we would see a significant up move coming in tomorrow as well. So that's it from the perspective of the analysis. We believe that definitely it was an incredible day of trading in the Indian markets today. This kind of broad-based rally definitely indicates strong underlying confidence, and this could signal further positive momentum for tomorrow and in this entire week. So, uh, in today's trade, what were your biggest wins? You can put it across in the comments. So share your thoughts and the trading experiences of today, because it had been a massive or incredible wave that we had seen from a very long time. So if you find this analysis helpful, make sure to smash that like button and subscribe to our channel for more daily insights, and hit the notification bell so that you do not miss any future explosive market actions from our end. And we will keep posting our trading profits as well as our trades what we are anticipating to take as part of our daily trading journey. So till then, trade smart, and we will see you